You're tuned back into Agriculture Today, and we continue our show and conversation with K State Grant economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Daniel, Guy, as we continue talking about the grain market, picking up with soybeans, and what are we seeing domestically?
The results of the WASDE report were responded to really pretty positively, quite positively, at least initially by the trade. You'd seen a pretty strong jump in prices. Now I look as we have seen see after that report some retracement of all that strength. But anyway, you did see some increase in the U.S. projected yield, up about 1.1 bushels per acre to 53.6. But then the area planted, what had actually, whereas corn had gone up about 2 billion bushels, soybeans actually fell down to 80.925 million acres, just about 2.5 million acres lower, and harvested acres projected now at 80.104 million acres, and that'd be down about 2.43 million acres. So I think we've seen this before, and where we've ended up and had projections of U.S. corn end up and be raised higher, and soybean projections dropped substantially by the time we get out here into July, August, September. So starting to be a repetitive pattern. So with that, we did see I guess in combination with a little stronger usage in the current marketing year that we're in till August 31st, had seen ending stocks that year down to 330 million, brought that into the new crop year, lower beginning stocks. The production number down to about 43 million bushels, down to 4.292 billion. So you have a lower supply overall, and a reduction in projected exports based on buying patterns of late, et cetera, and expectations of the USDA down 40 million bushels, down to 1.705 billion bushels. And so total use with some other minor adjustments, total use down about 43 million bushels, ending stocks down about 20, down to 209 million, price unchanged at $10.10. So stocks to use lower down to 6.7% stocks to use here in the US. So going to be interesting to watch, in terms of the different moves and where things are going on. We've been trying to watch closely the balance sheets for soybean oil and soybean meal. Excuse me, just a minor change in old crop soybean oil supply and demand balance sheet, a little bit low, pardon me, a little bit higher beginning stocks. And so I think the number to watch for both these commodities, whose marketing year will end up they're in October 1st instead of September 1st. We'll see how their export figures work themselves out. We had been having pretty strong soybean oil exports for a number of reasons. A guy could talk to that. And exports actually for soybean meal were actually raised some. So we'll see where all that goes. Guy, you want to take the international side?
Yeah, internationally, even though the U.S. Numbers were a bit bullish and supportive of the market, global numbers were pretty much unchanged this month. Argentine soybean imports were up slightly, 300,000 metric tons. No change in other competitor bids around the world for old crop. Chinese imports, the soybeans unchanged at 106 million metric tons and crushing 103. 25, 26, a little higher next year at 112 million metric tons for crush and 108. One thing I think that's a bit optimistic. I think we're starting to see China reach peak soybean demand, particularly when we look back the last 25 years. World exports of soybeans declined 1.2 million metric tons to just under 125, a little bit less than this current year. That's for global trade. And what we're seeing is ending stocks unchanged. We're sort of been both sides of 125 million metric tons on the international situation. Not a lot of changes on that. But keep in mind, we are working off a record world production of soybeans of 426 million metric tons, and that's up 2.5 million metric tons from last year. So supplies are a little bit looser, but we're seeing pretty steady demand and trade there.
Daniel, what are we seeing for wheat?
Uh, for wheat production, we've seen the wheat supply demand balance sheet end up and be have minor changes with the ending stocks figure for the current marketing year that ran started June 1st, down 21 million bushels, down to 869. Stocks to use figure was in July 44.3% stocks to use, now down to about 42.8, so a little bit tighter. Really not any other major changes. The acreage figures were shaved down a little bit lower. The yield figure up just a hair higher. We did see if there's one number that does stand out, it would be the domestic projection of U.S. exports for wheat, up 25 million, up to 875, and most of that's hard red winter. It's still interesting to see the domestic U.S. hard red winter balance sheet show strong exports. And here I guess I was surprised to see the jump that we'd seen last in the July report from 210 up to 275, and now they're up to they've taken that number another 25 million bushels higher, up to 300 million bushels. So uh, we had seen in the old crop marketing year for hard red winter wheat, we were at about basically 61% stocks to use. Now we're down to 55% stocks to use. And, it's buyer's market, low price wheat. And we've seen that here in Kansas, one or two prices peaking a little bit, cash wise above $5, most of them below that. And pretty good buys. And that supplemented with, a little bit more attractive U.S. dollar, at least it had been the case, has helped us to be that much more of a strong competitor in the world export market for wheat. So, and there was one change also in the projected price for wheat that basically took a dime off it down to $5.30. But the reason they stated that issue that they made the change had to do with more with the corn situation, where there's going to be abundant corn available, and kind of a cross market effect, we'd call it, that just not as much buying pressure for any wheat feeding here in the U.S. because of the abundance of feed grains that are likely to be around. Go ahead, Guy, on the
Hi.
international
Yeah.
side.
Yeah, looking at the world situation, USDA shaved just 1.6 million metric tons off the record world wheat production. It's now down to just under 200 or 807 million metric tons. That's up about 1% from a year ago, but we are looking at a record world production of wheat. Russian production steady at 83.5 million metric tons, exports steady at 46. Ukraine production at 22, exports steady at 15.5. European looking at production of 138 million metric tons. That was up 1 million metric tons. Exports at 32.5 million metric tons. Our friends to the north up in Canada, their numbers were also unchanged, 35 million metric tons, with exports steady at 27. Australia got a bit of rain there in July. Crops looking a bit better there.
So it does rain periodically in Australia?
It does once in a
Oh,
while,
I
right?
was just
But they're
curious.
always needing a drink down there.
Oh, okay.
Australia is steady at 31 million metric tons versus 34 last year. So their exports are down to 23 versus 25 million metric tons last year. Interesting one in China, their production of 140, which is off 2 million metric tons from July. Imports, though, still unchanged at 6 million metric tons compared with 4.2 last year. I think that's sort of doable. They've had a bit of rain, and I think there's some quality issues there in China. That's why I was a bit surprised they reduced the wheat feeding on that particular China numbers. World ending stocks are expected to be at 260 million metric tons. That gives us a stocks to use 32.1 versus 32.5 last year, tightening up slightly, but look, 32% stocks to use is a pretty comfortable balance sheet.
I guess I would say too that so obviously there's enough wheat around in the markets for the world to feel pretty comfortable. But again, 2 years ago, 31.9%, 33.9% stocks to use, 33.6 last year, projected 32.1 this year. And again, nobody feels crowded when you look at US minus China, world minus China. 2 years ago, 21.1, 20.5 last year, now 20.45. So uh, it's there's something going on. Must be something going on with either the storage or the efficiency of handling for wheat that we're tolerating tighter supplies without being stressed in terms of being worried about supplies being available. And generally for wheat, that the world tends to not be as tolerant of really tight wheat supplies as they are as some of these other crops. I think it's because wheat so prevalent, so important in terms of milling and bread production and human consumption. Any
Yeah.
thoughts on that, Guy?
No, that's exactly right on that. Wheat and rice as well being both food grains. People get a bit nervous when those supplies tend to tighten up a bit. Might switch a bit to currency on that. Currency's been lending a bit of support to the market. Over the last month, we've seen currency stabilized about 98 and a quarter, 98.25 on the dollar index. Keep in mind, first of January, start of the year, we were up around 110 on that index. So it's come down over 10%, which should be lending some support to commodities in an otherwise bearish situation. When I look at both wheat and corn, look, we're currently at 5-year lows on those commodity prices. Soybeans have seen a little bounce off of that, but my other concern is, look, we have current commodity prices below that cost of production. Looking at next year, and I think it's a good opportunity for end users and consumers to step up. So it makes me a bit optimistic on demand, and I think with the lower U.S. dollar, it makes our values a lot more competitive in the rest of the world. So I think we're starting to see that reflected in some of the export program.
Guy, Daniel, I appreciate you both taking the time to join us today.
Thank you, Shelby. Appreciate it.
Thanks, Shelby.
That was a senior economist at the IGP Institute, Guy Allen, and K-State Grant economist, Daniel O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead.